focus on the oil and gas space now. Yesterday, the oil marketing companies hit fresh highs, fresh 52-week highs. So that space has really been booming. Apart from that, Petronet LNG has also executed a long-term LNG contract with Qatar Energy. To discuss about these developments, Harshvardhan Dole of IIFL joins in. We also have the India Energy Week, which is currently underway. So all of these companies are in focus. Harsh, thanks a lot for joining us. You know, oil marketing companies, right? I wanted to start with that. That entire pocket is at record highs. How are the valuations looking right now? Do you see both, an upside on growth as well as on valuations?
Hi, good morning. I think if you were to look at from an earnings perspective, the macro environment is so supportive that for the next maybe 12 to 18 months, the volatility in earnings, all the three companies will materially come down. And that's mainly because the GRM volatility will come down, oil will be fairly stable, and the pressure to pass on these fluctuation will no longer exist. And typically what we have seen is in such benign environment, OMCs tend to deliver very stable QOQ robust performance. So even if I assume that this year was a supernormal year, whereby OMCs are recouping some of these losses that they encountered in FY23, FY24 and 25 will be a phenomenal year in terms of cash flow generation. And relative to the ROEs, cash flow profile, and the stability in earnings, valuations, despite the run-up, are very cheap. And to that extent, we are hugely bullish on the entire downstream, particularly on the OMC bank. I mean, let's pick case of BPCL, which is our top pick. In the base case, we are looking at anywhere between 65 to 70 rupees of consolidated EPS next year. And the stock is still cheap at, say, 7 to 8 times if you strip out the embedded value. In peak, BPCL typically has traded anywhere between 10 and 12 times in terms of PE. So you can imagine what kind of run-up can further give up.
I got it. BPCL is a top pick. Got that. And I mean, of course, congratulations. The stocks have done so well. I'm not sure when you initiated, but they, at any point, even 2 weeks back, 3 weeks back, longer, I mean, even higher, we've seen larger upsides. Harsh, what has changed though, fundamentally, in two or three lines? Is it the market's willingness to assign a higher P multiple to these names, or is it an assumption that oil prices will stay benign for the foreseeable future? Because government's pricing policy has been pretty stable. I mean, for years now, it's not been very much change. Marketing margins have been a little volatile. So, really, what has changed here?
So, to answer in short, one, stability in oil prices, and B, firm support from the government. I mean, even today, the petroleum minister has come out in public and saying that the scope for fuel price cut does not exist because OMCs need some time to recoup. But these are the measures which boost confidence, particularly from the investor side.
All right. Hi, Harsh. Good morning. Good to see you. Well, Petronet LNG, they have executed that long-term contract for purchase of 7.5 MMTPA LNG with Qatar Energy. How do you read this deal for them? Yesterday, the stock was up and about. Tell us more.
So to be very honest, it was expected that even Qatar is very keen to maintain market share of molecules in India, and they couldn't get a better buyer than Petronet LNG. So when we valued the Petronet LNG, it was assumed that they will be able to sign a contract at much better terms. And to that extent, the development is broadly in sync with what most of the investors were expecting. It definitely improves growth visibility beyond FY27, but that was largely in when we did our DCF analysis. I think the bigger question for Petronet is the capital allocation, because they are investing great amount of money in businesses which are non-core to them. So key is not how to maintain cash flows for the existing utility business, but how to de-risk the business by not getting into businesses which are not core to you. That's the biggest challenge for Petronet LNG, and therefore we are actually cautious after the run-up in the stock price.
Okay. By the way, I just want to point out the pre-opening rates are settling now, and plenty of stocks actually in focus. So Britannia is your top gainer, up 2.5% on the back of this decent set of numbers that we saw. From Britannia, Tata Steel has been hitting fresh 52-week highs. So that one, once again, is up 1.5% this morning. And then you have Nykaa, which is the big mover in the broader markets, up almost about 5% after a decent set of numbers that the company reported. The profits have almost doubled on a low base. So the street likes that, up 6%. But Harsh, before we let you go, can you give us your top picks in the sector now with a 12 to 18-month time horizon?
Clearly, all the stocks across the sector are cheap. And if I were to, therefore peg, certainly OMCs we like the most. Downstream are a top preference. But having said that, even upstream are cheap. I don't see a meaningful downside. So BPCL continues to be a top pick, followed by IOC. And I don't see a reason why even ONGC and OIL should not do well. So I see value across the sector.
Got that. Anything else in that entire sort of... I just have one question, Harsh. There are expectations, I don't know if you agree with it, there will be a huge glut of LNG, gas glut, later this year, next year, etc. How does that play into somebody looking at Petronet LNG?
Prashant, definitely, India will be one of the biggest beneficiaries of weak LNG prices globally. And the mushrooming of infrastructure bodes well, particularly for somebody like a Petronet who has got a phenomenal infrastructure. So as I said, earnings until FY 26-27, there is no risk. But the biggest overhang for the stock is going to be, nearly 20,000 crore investment that they have planned in petrochemical project. And if you appreciate, petrochemicals is something which is absolutely non-core to the company. And the challenge is going to be how to, convince investors that they will be best at the business which is non-core to them. So in my opinion, one should be slightly cautious at the current market price. I will not go overboard basis what is happening based on macro trends.
All right, Harsh, we'll leave it at that. Thanks a lot for joining in and giving us your views. So OMCs are the top picks for the oil for IIFL, despite the kind of rally that we've already seen. But plenty of